Hello. The company being analyzed today is Transformers and Rectifiers India Limited. This company makes transformers, that electrical device transformers, and is aiming for some big growth. So today we're going to analyze the company's financials, okay, what the company actually does, and finally its big growth plans. This company aims to grow very fast. So, first of all, we have the market cap of 6,982 crores. So not the smallest of companies, small to mid capish. Current price of one share 232 rupees. Stock price to earnings ratio is 26.2 times. The book value per share, book value assets minus liabilities of company. So book value per share is how much was it? 44.8 rupees. Here we have the financial highlights of the company from fiscal year 2021 all the way to fiscal year 2025. These numbers are in lakhs. We can convert them into crores, just add two decimal points. So here we have revenue from operations, we have EBITDA, we have profit for the year, and we have all the, what do you say, ratios and the important metrics. So in fiscal year 2021, revenue was 73,125 lakh rupees or 731 crores. 2 years later, two fiscal years later, this increased to 1,381 crores of revenue. And finally, in fiscal year 2025, 1,950 crores of revenue. And you can see there was a down year in fiscal year 24, revenue decreased, but then a big bounce. If we see profit for the year, okay, profit for the year was 18,772 crores or 187 crores of profit. 187 crores of profit. You can see 701 lakhs, 1300 lakhs, 3723 lakhs, 4152 lakhs, and finally 18,772 lakh rupees. So big growth in the profits. Here you can see the EBITDA margin. EBITDA margin has grown from 9.55% to a big boost in fiscal year 25, 16.12%. You can see profit after tax margin or the net profit margin, massive boost from 0.95% just four fiscal years back to 9.45%. And you can see, especially fiscal year 2025 was a massive year for the company. Okay. So it kind of distorts the overall financial growth because this year was so good. Okay. If you go by only fiscal year 24, then things don't look that good. Then return on capital employed has increased to 22.76%, which is really nice. Current ratio is current asset divided by current liabilities. If it increases or decreases, it's not exactly a bad or a good thing. It depends kind of on the industry. Now, what does the company actually do? So, headquartered in Ahmedabad, this company is a prominent player in the manufacturing of transformers and reactors in India. Reactors, another electrical equipment. I forgot what it actually is used for. So, order book. The company currently has an order book of 5,450 crores. Orders it has already gotten from customers, 5,450 crores. Okay. And inquiries under negotiation, meaning orders it has already bid for, like projects it has bid for and they're currently under negotiation, 16,500 crores, meaning it won't win all of 16,500 crores, but these are the things they're currently negotiating for, and a portion of them they can win as potential orders. And here we have the financials, finally in crores of rupees. The products, what do we have? We got single phase power transformers, we got furnace transformers, rectifier distribution transformers, mobile substations, series and shunt reactors, to different types of transformers, even solar application transformers. And look at this. Company operates in 25 countries and has an installed capacity of 40,000 megavolt amperes. 40,000 megavolt amperes. So capacity is being measured in megavolt amperes. Important to remember in order to compare for capacity expansion. Okay. And it's a B2B model. Okay. Meaning it sells to other businesses. It caters to power generation companies, power transmission companies, power distribution, and the industrial sector. It caters to that. So, like renewable sector, they will need the solar application transformers. Now, what is UEOB? That is the unexecuted order book, as far as I know. Unexecuted order book. So, as of December 31st, 25, let us see the revenue breakdown first. Revenue breakdown. 56% of revenue came from utility clients. I guess utility clients. Uh, then industrial and private clients contributed 35%, and last 9% is, I guess, maybe EPC clients. And here we have exports and imports. Export revenue was only 4%. The blue one, imports, sorry, the domestic sales were 96%, and the export revenue was only 4%. Now, in the terms of order book, the unexecuted order book, where is the order book coming from? You can see it seems the EPC companies. These are the companies. I hope I'm saying this correctly. Maybe I'm not. But EPC, whatever the segment is, it's contributing 30% of the unexecuted order book. 44% right now is from utilities, and industrial is contributing 26%. So right now it seems that EPC will have a way bigger role. Now, either EPC refers to clients which are installing some kind of things, installing systems, installer companies, or EPC refers to the fact that Transformers and Rectifiers India is the one installing power systems with transformers in them. EPC means engineering, procurement, construction. You engineer, or let's say a transformer, or let's say a substation. Remember one of the products it was mentioned substation. You procure the material for that station, the P part, and finally you construct it. So EPC. So it can mean either two of those things, and it's my fault. I should have actually searched for that. Now let's continue. So for fiscal year 2026, okay, fiscal year 2026, the revenue target is 2,600 crores. 2,600 crores. Okay, remember that. 1,950 crores of overall revenue in fiscal year 2025. They want to increase this to 2,600 crores in fiscal year 2026. So massive growth for fiscal year 2026. Then comes the product portfolio. Power transformers, furnace transformers. It is used to feed electrical furnace that is used to melt and refine materials. Okay, so it can be used in melting industries and refining industries. Reactors, shunt reactors enhance energy efficiency in high voltage transmission systems. So electricity transmission, reactors can be used in that. So you can read, you can pause, you can see the uses and where in which industries it is used. So, here we have it. Transformers application in various industries: petrochemicals, pharmaceuticals, power transmission, cement, mining industry, paper and pulp, even railways, green energy, metal processing. So, these are the different kind of industries, the vast amount of industries it can cater to. Now, conference call analysis. What is the management saying about the future growth of the company? The company remains fairly confident of delivering at least 25% revenue growth over fiscal year 25 for fiscal year 26. They're targeting revenues of 2,600 crores for fiscal year 26 with an EBITDA margin of around 16%. Okay. Now, at present, they have a capacity in a Moria plant 27,000 megavolt ampere, Changodar plant 12,000 megavolt ampere, and Odhav plant 1200 megavolt ampere. Remember, it was around 40,000 megavolt ampere total capacity. Now, the new capacity which they're going to be adding in the next financial year is 15,000 megavolt ampere, 15,000 in quarter one and 22,000 megavolt ampere in quarter two. So the current capacity is around 40,000 megavolt ampere, and in quarter one of fiscal year 2027, which is about to come, we are, I think, at the end of fiscal year 2026. So next fiscal year 27 quarter one, they're adding 15,000 megawatt, then 22,000 megawatt. So total will be how much? 37,000 megawatt ampere new capacity on existing of 40,000. So almost double. Now, look at this. This is big. This is the company saying, the management is saying, we have been guiding for 1 billion or 8,000 crores of revenue for fiscal year 2029. Current revenue was 1,950 crores fiscal year 2025. So next four fiscal years after, okay, in the next four fiscal years, they want to reach annual revenue of 8,000 crores. That is their long-term vision. How will they achieve that? This has got the various factors into that. Not only the growth of the transformer business, but also growth of the backward integration facilities, what we are putting up. The backward integration facilities itself are going to give us a robust business, as well as growing demand of the industry is going to give us a huge amount of new business. So, business itself is doing well, the industry is doing well, a lot of demand, and they're doing backward integration. Okay. As you see today, we have 5,500 crores under unexecuted order book. And by close of this year, we will be having around 8,000 crores of order book on hand. Okay. So, what this paragraph said, first of all, by fiscal year 29, the vision is to have 8,000 crores of revenue. That is the vision. Okay. Around 8,000 crores of revenue. Then, by this year end, by fiscal year 2026 end, we are currently in quarter four of fiscal year 26, so it's about to end in around March 31st. March 31st, 8,000 crores of order book. Right now, we already saw it, it was like 5,600. 5,500 is mentioned here. They want to reach it to 8,000 crores of order book. So they want to even capture more and more orders. Now, so what some questions were asked. So one question is, what is the margin visibility in the next 1 to 2 years? The profit margins. Management answers, the margins will stay stagnant at between 15 to 16%. We don't see much variation in margin. The only variation that can happen is 1 to 2% in margins. So they're expecting pretty stable margins, 15 to 16%. Now, the current order book execution timeline is 18 months. Sorry, not 18 months, 24 months. 24 months. So the current order book, which is around 5,600 crores, it will take around 2 years to complete the order book. Okay, around 2 years. Then 15 to 16% profit margin, as I mentioned earlier, and then 200 basis points can improve up above that due to backward integration efficiency. Now, what is backward integration? You have a supply chain. You're making a product, you had a supply chain, you go forward, there's some other product, you go backward, you have the raw materials kind of. You can have the components or the raw materials. They're going into backward integration. So they're going back in the value chain, supply chain. They're going to produce their own components used in the products. Okay. And those components are obviously sold to them by companies making a profit. So if they actually manufacture those components themselves, they can capture the profits of the companies who were earlier selling to them. See, they will capture the profits. So when backward integration is done, they expect 200 basis point improvement, which is 2 percentage points. So 15 to 16% profit margin, they can expect this to increase to 17 to 18% profit margin, EBITDA margin basically. So yeah, and finally, a plant will reach around 85% utilization by next year end, including the expansions. So 40,000 megavolt amperes, we have the current capacity. They're adding, remember, I think 37 megavolt amperes they're adding in quarter one and quarter two of fiscal year 27. And by the end of fiscal year 27, I hope the end of fiscal year 27, the overall plant utilization capacity, that is the total capacity utilization, how much of the production capacity is actually being used to make stuff, the products, will be 85%, including the expansions. That was it. That was Transformers and Rectifiers India Limited. I will need to search what those EPC customers actually are. But the company is aiming for massive growth. So basically, EBITDA margin for fiscal year 2025 was 16.2%, 16.12%, 1,950 crores of sales. They want to reach to 2,600 crores of sales in fiscal year 26. And by fiscal year 2029, they want to reach around 8,000 crores of sales. They're going pretty big. They're targeting pretty big or planning pretty big capacity, production capacity expansion. They have a big order book, like 5,600 crores ish, and they're expecting even more orders. Yeah, 5,450 crores with 16,500 crores of projects under negotiation. So let us see how the company does in the future. Bye bye.